tensions are rising ahead of the South African Reserve Bank announcing its interest rate decision later today. Some unions are demanding changes within the institution, arguing that it needs to better reflect the needs of workers and the broader economy. The Reserve Bank has raised rates 10 times in the last 2 years to curb high inflation. Sumitra Naidu has the details.
The SARB's Monetary Policy Committee has raised its benchmark rate by 475 basis points since November 2021 in a bid to control inflation. Inflation has eased back into the bank's target range of 3 to 6%, but interest rates are still high at 11.75%. South Africa is in the midst of a cost of living crisis. Some unions believe the SARB is to blame.
They have been using a wrong policy instrument for a country facing the developmental challenges such as we do.
The Reserve Bank's mandate is to protect the value of the rand, essentially to protect the poor from high inflation. But some believe this policy is more in favor of the rich, and the bank's inflation target should be more accommodative, between 6 and 10%.
We think they could be a bit more sensitive to the issues of economic growth, of job creation, of not stifling the economy is recovering and so forth. So that's why we've had differences with them around increasing the repo rates excessively at times.
10% is what we should be looking at, but definitely 3 to 6% is way too low for an economy that have a massive developmental backlogs such as the ones that we have. We've met with the governor. We related this, and of course they hide behind the fact that they have a mandate they are pursuing, and they are not developing the mandate for themselves.
Some economists are divided on what the SARB should do. Some argue rate hikes help to curb inflation, while others suggest rate cuts to stimulate economic activity.
The problem we're trying to solve is to keep inflation low and stable. Now 10% suggests that it's high, right? That actually you'd only act once prices are increasing by 10%. Now what kind of incomes do you think that is actually trying to save? We're not going to see that for some time because the economy is in such bad shape that we're going to have incomes that are growing up at 10%, because we want to at least have incomes going up above inflation to keep people actually with real income growth.
The Reserve Bank's mandate is to maintain price stability, but its only tool is interest rates. However, the bank is coming under increasing pressure to find new ways of fighting inflation. Sumitra Naidu, CGTN, Johannesburg, South Africa.